Hi everyone, today I'm going to be talking about one of the biggest opportunities in the stock market at the minute, I think, and that is Pinterest, a company that I believe is critically oversold. I myself, for full disclosure, am a shareholder and have been for a couple of years now. It's one of my favourite investments, and it's a company that I believe has incredible long secular tailwinds in its favour as it angles itself towards e-commerce integration, and of course it has the global shift to online advertising. When a growth stock gets into oversold territory, as I believe Pinterest obviously is, down 63% from February highs, basically off the back of low monthly active user growth and a kind of secular downturn, I think it must be asked, is it good value here, and is this becoming a value stock at these prices? Anyone who's been following Pinterest as a business over the last few years will know the story of the price decline of Pinterest was started by weak US monthly active user numbers, big decline in Q2 2021 and a further decline in Q3. This news was concerning for many, and I don't blame them for being concerned, of course. Like, user numbers in a social media platform are critical, not in this case in my opinion, but people were worried about this and there was a big sell-off. I think this is not ridiculous. There was, of course, a big pandemic pull forward, and then as the world opens up, people have more things to do other than sit at home on social media, and people got out into the world and users. Pinterest gained during the pandemic, did not all stay. For me, this is completely expected. The price decline was way overblown on this use in my opinion, and recently Pinterest has also been caught up in the decline of growth stocks generally, which kind of explains the 60% decline, and there's just a bit of pessimism around the stock, which was at one point a real growth story. The story for Pinterest really isn't user growth, and I don't think user growth should be expected. It's particularly in the US. I mean, as of Q3 2021, it has 89 million users in the US. That's roughly a quarter of the US population. Pinterest is not Facebook. I'm not sure what people want Pinterest to be, but it is not going to be Facebook, and it's not going to have 50% of the US population using it on a monthly basis. That's just not going to happen. 25% of the US population, 90 million users, seems to me roughly saturation at this point. Like, it is not something that, your average Joe man is going to use. It's typically, the majority of users are women, and I think this is kind of saturation. So I don't see US users growing much from here. I think it'll grow single digits, something like that, maybe decline every odd year. Globally, users up 1%. International user growth is quite a big story here. Again, they declined slightly, but up year over year. So again, something I'm not too concerned about. 450 million users that's a lot of users. Like, again, this isn't Facebook, so I don't think that is anything to be concerned about in the long run, as long as it doesn't continue to decline. The story, of course, with Pinterest is user monetization. Pinterest average revenue per user is still a fraction of some of its competitors. The US leads the way with $5.55 as the most recent quarter, which is why the US user decline was a concern. So again, kind of understandable. But the monetization is growing at 44% year over year. This is not something to be concerned about. In fact, this is an absolute positive. US year over year numbers up 44%. Global year over year numbers up 37%. International user growth, average revenue per user growth, 81% gain year over year. This is absolutely tremendous. Pinterest has roughly 350 million international users. That's 4 times the number of US users, give or take. And they're a fraction, not even a tenth, of the monetization rate. The story here is monetizing user growth is completely unnecessary. If Pinterest manages to grow its international average revenue per user to even a respectable fraction of the US numbers, the revenue will go through the roof. The company is now profitable, so we can look at some PE numbers. 61 current PE, 20, just under 30 for a forward PE. As you move further out, this starts to look even more ridiculous. 2023 forward PE is expected to be 20, and 2024 predictions under 15. It has a price-to-sales ratio of 8. Again, absolutely tremendous for its history, some of the lowest valuations we've seen for Pinterest. PE ratio is obviously the lowest valuation we've seen because it wasn't previously profitable. Enterprise value to revenue 7.5. Enterprise value to free cash flow 29. This is about as cheap as Pinterest has ever been, and I don't think it's going to be any cheaper going forward. I think this is a rare opportunity to buy Pinterest at these prices. So I'm looking around to see some regs flags to Pinterest. I'm really not seeing any. Company has tremendous financial strength. Cash to debt ratio 12.2. This is pretty strong. Strong debt to equity positions. Strong debt to EBITDA positions. Excellent interest coverage and a firmly safe Altman score. Next to no chance of financial default and no financial distress. I'm not concerned about this company's balance sheet whatsoever. Considering this is a growing company that is spending for growth, these are all tremendous numbers, and I'm not concerned about Pinterest balance sheet whatsoever. Profitability picture is also strong. These metrics, operating margin, net margin, return on equity, return on assets, all pretty much at the highest they've ever been in Pinterest history and are looking really strong. So aside from the obvious secular tailwinds and 40% revenue growth a year, Pinterest has SaaS-like gross margins. These graphs from macrotrends.net if anyone's interested. Gross margin, or revenue minus cost of revenue, is around 79%. Absolutely excellent. The highest it's been in Pinterest history. It's growing terrifically and has been relatively steady over the last few months. Currently, net margins are depressed due to sales and marketing, R&D, and stock-based comps. They're around 14%. This is completely normal in a growing enterprise and is actively encouraged. I'd like stock-based comps to come down over time, and I'm sure it will. As Pinterest grows into a more mature company, this margin will rapidly increase earnings as revenue grows, especially at the current rate of 40% yearly today. This is exactly what you want to see from a company like this. Really strong gross margins and spending to grow. Spending on sales and marketing, spending on research and development to add new features, and spending on talent. So I'm looking around for red flags with this investment. I'm just not seeing any. So barring a precipitous drop in users in the next few quarters, which I don't believe is going to happen, I don't think anyone really believes is going to happen, Pinterest is really a rare valuation, and I think all the problems are pretty much priced in at this point. Pinterest now sits at $32 and it's a $20 billion company. In my opinion, Pinterest is one of the most obviously undervalued companies on the market. Forward PE under 30 for a company growing at 40% a year with 79% gross margins. User decline for the last 2 quarters is not worth 63% of the business value, in my opinion. We're talking like 10 million US users. Palantir, for example, is growing at 30 to 40% a year with 80% gross margins and trades nearly 20 times sales. Pinterest trades at 8 times sales. I think Pinterest has just become a less fashionable stock. It's got beat down a bit unnecessarily, and I think this is grossly unfair. The selling has just got carried away and has presented a rare opportunity, in my opinion. Pinterest has long-term tailwinds as it moves towards increased e-commerce integration, which I think is only going to help it. And of course, the section's move to online advertising is without controversy issues of other social media platforms by nature and could be seen as an ethical platform compared to the likes of Facebook and Twitter, making it an attractive offering for advertisers. And also it is less jarring to see an advert on Pinterest than Twitter. Pinterest, you often go looking for adverts, essentially. You go looking for inspiration. On Twitter or Facebook, it's jumping out in the middle of the newsfeed. It's not as attractive. I think Pinterest is a much more organic platform to see advertisements. I think this will pay off over the long term with advertisers' take rates. I think it'll pay off for Pinterest in the revenue numbers. Again, I think this is a rare opportunity to pick up a company that's absolutely beat down for very little reason. Of course, the caveat to that is maybe the user growth drops down. I don't see it. But if the users continue to drop, then maybe we'll have to reevaluate. But as long as the average revenue per user continues to go up, I'm really not concerned about this company, and I think it's a fantastic company. There'll be a fantastic investment. I can easily see this going up to a $100 billion company in the next 5 to 10 years. That'd be a 5x from where it is now, and I'd be absolutely ecstatic with that. That being said, none of this is financial advice. I implore you to do your own research or contact a registered financial advisor. With that, thanks, and like and subscribe if you enjoyed the video.